Today, Gemini sues Genesis. JP Morgan argues that an SEC approval for a spot Bitcoin ETF likely won't be a game changer for crypto markets. And Chen Arad, co-founder of Solidus Labs, breaks down the firm's new reporting on insider trading activity in crypto. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices are mixed to close out the week, with Bitcoin holding steady above the $30,000 mark by noon Eastern, and Ether falling just under 1%. Solana, meanwhile, climbing nearly 8% to more than $21. Bitcoin and Ether are both in the green for the first week of July and the second half of 2023. Both cryptocurrencies rose about 1% in the past 7 days, that also as of noon Eastern. All right, let's talk about the top stories. First up, spot Bitcoin ETFs have been all over the headlines recently as BlackRock, WisdomTree, and others rush to file their own. But JP Morgan says even if approved, they may not be a game changer for crypto markets. In this new research report, JPM noted that these spot ETFs already exist in Canada and Europe and haven't attracted mass institutional adoption. Now, while the ETFs may not boost Bitcoin if approved, JP Morgan did say the moves to make Coinbase a surveillance partner for these funds has led to the, quote, bullish momentum of the company's share price in recent weeks. All right, next, Binance is facing a series of high-profile departures from the company, and CZ is shrugging off rumors they're over the company's regulatory scrutiny. Chief Strategy Officer Patrick Hillman and Senior Vice President for Compliance Stephen Christie have confirmed they've left the company, while Fortune reports Senior Director of Investigations Matthew Price and General Counsel Han Ng have also made their exit. As part of that reporting, Fortune cited a person at Binance familiar with the matter who claimed the departures were over CZ's response to the ongoing DOJ investigation. But at the same time, Hillman tweeted that after 2 years, it was simply time for him to move on. Stephen Christie also tweeted, saying his reason for leaving was different than what was reported. CZ tweeted out his own statement too, saying that there have been departures, but the reasons dreamed up by the news are wrong. Finally, Gemini is suing Genesis. Cameron Winklevoss tweeted this morning that the firm just filed suit against DCG and Barry Silbert, claiming fraud against creditors. The lawsuit comes after a week of pressure from Winklevoss directed at Genesis. On Monday, he tweeted an open letter laying out Gemini's best and final offer to the company, letting Genesis spread out the debt owed to the Winklevoss's company by up to 5 years, while still letting DCG retain the profits from selling off Genesis Trading, the company's lending unit. Winklevoss had given the company a deadline of 4 p.m. on July 6th to respond before Gemini looked to sue its partner. We reached out to Genesis but haven't heard back yet. The DCG company filed for bankruptcy back in January and owes more than $3 billion. Gemini is its largest creditor, with claims to more than a third of that figure. All right, on to our main story. Solidus Labs recently released the first part of the company's 2023 crypto market manipulation report, with a focus on insider trading activity in the space. Crypto World's Talia Kaplan spoke with Solidus Labs co-founder Chen Arad about the report's findings. Take a listen.
Last time you were on the show was back in May. That's when Solidus Labs unveiled what the firm called the first insider trading detection tool, specifically designed to monitor decentralized exchanges. And now we're seeing that tool in action through your new report, which found that insider trading in crypto is more prevalent than previously thought. Can you take us through data Solidus uncovered that speaks to this point? One point that stood out to me from the research: more than 50% of crypto token listings since 2021 show evidence of insider trading. What else did Solidus uncover?
Absolutely. Again, thank you for the opportunity to speak about this, because we believe it's a massive issue of market integrity in these markets that needs to be addressed to fulfill crypto's potential. What we found looking at the listings of new tokens going back all the way to the beginning of 2021. So essentially, if we look at all the tokens listed across these exchanges, and I'm talking about centralized exchanges, just to be clear, across all of the tokens listed across of these exchanges since the beginning of 2021, 56% were accompanied by behavior that looks like insider trading. To be clear what that means, someone essentially, most simply put, bought them right before they were listed or right before it was announced that it would be listed, and then sold them right afterwards. When we say someone, in this case, we're talking about cryptocurrency wallets. There's a lot of interesting stuff about how those wallets behave. We see, for example, oftentimes that those are wallets that weren't used or just created before those purchases. Again, indicating potentially that someone planned this and is trying to avoid evasion. And we're also seeing a lot of instances where those actors are serial insider traders, meaning we see the same wallets or the same groups of wallets affiliated with this kind of behavior over and over. You pointed it out. This is a very high number. It's important to say it's an average. We only looked at this group of exchanges, but it's very, it's an issue across the industry as we're, looking at other places, at other exchanges as well. The bottom line is that at the moment, if you're buying, a newly listed token, there's a good chance that its price was affected by some of this behavior. And we believe it needs to be stopped because markets that aren't fair and transparent don't last. And crypto needs to decide: is it an industry of insiders, or is it a fair market that does everything it can to ensure this kind of stuff doesn't happen, to fulfill its potential to serve society better.
One interesting point that jumped out at me when I was reviewing this study: of the 234 token listings examined in the report since January 2021, I read that more than 130 have shown signs of insider activity, in some cases netting more than $200,000 in profits within minutes. Now, this study is the first part of your crypto market manipulation report series. As we discussed, this part, which was released last week, focuses on insider trading. It provides case studies, data, and explanations of the different methods used by crypto insiders. Can you take us through some of those methods?
The way to detect insider trading based on trading behavior is, essentially identifying, instances where people buy right before there's a big news event and sell right after that, that happened, meaning they knew that something was going to happen and use that information. And all of that, by the way, needs to be investigated and proven by law enforcement, to be indicted. In our case, the vast majority of the 411 instances that look like insider trading that we identified across these 131 tokens that you mentioned, most of those cases, the insider trading activity happened on DEXs, only on DEXs, meaning while the token was listed on a centralized exchange, the insider trader bought on a decentralized exchange and sold on a decentralized exchange, and then afterwards usually would transfer it in the direction of a few different wallets to try and separate the funds and hedge the risk of being caught. There are cases, we've also seen some of them, where one of the instances, either the buy in the beginning or the sell, actually happens on a centralized exchange as well. And again, it emphasizes the fact that you have to look both on centralized crypto trading activity and decentralized crypto activity. You have to look at both off-chain activity and on-chain activity to really be able to see the full picture of potentially malicious and manipulative behavior. So in some cases in quite a few of the cases, not the majority, but a few, you see that either the buyer or the seller is a centralized exchange and the other piece is on a decentralized exchange. There are also instances that we've identified where actually it happened only on centralized exchanges. That's a minority. That's obviously a small number of events. And again, just knowing a lot of the teams that work to prevent these things, there's really, really great work being done and very sophisticated crypto-specific policies that some of the most safety-forward and integrity-forward exchanges put in place to prevent these.
Thank you for that comprehensive overview on your new report. But I have to ask you before you go, you were actually born and raised in Israel. So I'm curious to get your take on the country seizing $1.7 million in crypto it believes was used to finance Hezbollah and Iran's Revolutionary Guard. Chainalysis says its tools helped with the mission, and I actually spoke to the platform's VP of investigations about it this week. What is your reaction to that development from Israel?
Well, first of all, regardless of being Israeli, any time that's illicit funds are caught and recovered and prevented from going to where they were supposed to be going, which is to enable, in this particular case, terrorist activity, it's very, very good news. Obviously, great work done by some of our colleagues at Chainalysis, which are constantly showing, they're close partners of ours and are constantly showing the power of the blockchain, the fact that you can detect, this sort of behavior with more efficiency than you could in the traditional world. There's a coalition of really great organizations. I see Solidus as one of them, and we're very proud to be a part of this community that basically uses the blockchain in order to show that, in a blockchain-based financial ecosystem, it's actually harder, not easier, harder to enable illicit finance if you use the right tools. It's true for market manipulation and, like insider trading and market integrity, the things we're very focused on at Solidus, and it's true for financial terrorism, like in the instance that you're referring to. The cool thing is that over time, you can see how regulators and law enforcement agencies are realizing this. And if in the beginning there was a concern that, it's this blockchain is this new anonymous way that, a criminal's haven for transferring money, by now, through incidents like the one you just mentioned, Israel's seizing of financial terrorism money, or even if you look back at events like, the Bitfinex arrest at this point over a year ago, where you see a judge saying the only reason we were able to recover billions of dollars in Bitcoin, the biggest recovery of funds in the history of the Department of Justice of the United States, you can see a judge saying we were only able to recover these because they were on the blockchain. Again, there are a lot of people working really hard to make sure that we constantly have better tools in order to utilize blockchain's advantages, which is, the path to dealing with the challenges. So, as an Israeli and as a citizen of the world and as someone who really believes in the potential of blockchain, very exciting news.
You can check out the full interview on cnbc.com/cryptoworld. Okay, that's all for this week, but we'll be back again on Monday, so we'll see you then.